Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Kevin Hassett emerges as the front-runner to be the next chair of the US Federal Reserve. The National Economic Council director signals he would accept the role if offered. Stocks rally and the dollar weakens as traders ramp up Fed cut bets, with data pointing to some softening of the US economy. Plus, it's UK Budget Day. Chancellor Rachel Reeves is set to present her highly anticipated tax and spend plans as she looks to placate both the bond market and backbench lawmakers. Stay tuned for our special coverage.
Well, sticking with the budget day, let's talk about how UK assets are performing going into it. Right now, FTSE futures, they're in the green, but maybe not as much positivity as you are seeing in the broader Euro Stock Index, higher by 0.7%. The FTSE only higher by 0.3. You are also, of course, keeping one eye on what the currency is doing. 131, just on the cusp of 132 for cable right now. How much of that has more to do with what's going on at the Federal Reserve? We're at 4% on the U.S. 10-year in the States. The countdown to the opening trade starts right now.
Wednesday morning, and then there was one. Kevin Hassett, the trial balloon has been floated, and there isn't much market reaction. Is that a good thing? Do we need to see further confirmation that he is the name in the frame for the Fed chair before we get the big market reaction? Kriti, so far, not a lot. I was expecting more once this happened, and we didn't get it. The NEC chair looks like he's going to be the Fed chair. The question is, what will that look like from a market point of view? His
name has been in the running for quite some time, kind of in and out, and it feels like it's been floated a little bit. I thought what was interesting, and I think the smartest take out here on Kevin Hassett's kind of emergence, if that's what you call it, actually came from our very own John Authors, not to plug our own Bloomberg Opinion columnist, but he said that no market reaction is actually a really good sign. It means continuity. He made the parallel to Ben Bernanke. Very different take, I think, on economic policy than Ben Bernanke, but still, I think, interesting here because you have had other names floated. Scott Bessent was one of them, and the markets freaked out when that was floated. You had Kevin Warsh, who's been, again, time and time again, nominated to be Fed governor. He was up for Jay Powell's job, and Jay Powell ultimately won out. The markets didn't love that either, and so no market reaction. Sometimes no news is good news.
Yes, I wonder if the market's come a long way in its thinking about whoever gets nominated to this position and sort of resigned itself to entering a new era with flavours of old policy making, flavours of new policy making with a little bit more political intervention perhaps. Because I wonder if Bessent would have got the same, to use your description, you know, sort of negative response in markets if it happened today. I feel like he's much more of a market whisperer these days, isn't he? And somebody that market perhaps trusts.
If you take a look at the prediction markets, though, we're not there yet.
Yeah.
So maybe we haven't had the reaction is the correct way of looking at this, because actually what the market was focused on yesterday was the possibility of a December cut, which comes way before the May switchover potentially at the Fed chair, in the Fed chair role. That certainly drove things quite significantly yesterday. Looks like two trades are basically back on, aren't they? The Fed December cut and the tech trade. Now, clearly there is a reaction between those two, but I think there's some nuance in what we're seeing here. Clearly, the December cut is still fairly finely balanced, and I think there's been a significant shift in terms of the tech trade between the two companies that you can see on the screen in front of you, Google and Nvidia. Has there been a structural shift here in the way that the market perceives the AI trade? Is Nvidia no longer the darling? Is Nvidia not the first name you think about now? Is Alphabet, Google, the first name?
Yes, and a lot of the conversations I read yesterday were dwelling on the same theme that we threw around about this yesterday morning, which was about losing one US business losing out to another business. Obviously, it matters depending on which one you hold shares in. But if you're invested broadly across tech or across US stocks, does that matter? Losing out to China would be a very different picture. And so maybe that's part of where the conversation lingers. I was particularly interested in all the weakness in the data yesterday, whether that was retail sales or the PPI giving us an indication that, according to BMO, that there won't be an uptick in CPI when that comes through, despite everyone's worst fears that would be the case. So some of that weakness in the US data, again, to your point, Guy, underscoring that first of those themes around rate cuts in December.
Well, it's the rate cut read-through, but then it's also, I mean, growth stocks famously outperform in a slower, decelerating growth environment. It's been a defensive trade that's always existed, and this comes back to kind of the tech valuation question. A lot of these tech companies that are thought of being as this safe defensive trade because they're sitting on massive kind of cash piles, basically. They have that liquidity. They have that access to the bond market. Suddenly they're investing in your data centers, your infrastructure, your more value-esque kind of propositions. are they still that famous growth trade in a decelerating environment?
Weirdly, breadth was actually okay yesterday, which
Yeah.
I found quite surprising. So I was looking at the kind of the internals and trying to figure out what was happening, and I thought it would be kind of everybody getting long tech, some shorts being covered by some of the hedge funds. That was definitely a trade, but breadth was actually weirdly all right, which kind of speaks to a market that is reasonably comfortable with where it is right now. Did we need to go through last week in order to have a decent rally coming through this week, into next week and into the end of the year?
Yes. So a busy market this week in terms of leadership at the Fed. Some of those market themes around tech continue. We also have a UK budget to get on with today. So Chancellor Rachel Reeves is set to unveil her much-anticipated budget later today. Let's go to Bloomberg's Lizzie Burden at Westminster for a preview. Lizzie.
Well, Anna, we've had months of speculation, weeks of leaks. Finally, we're here, and the Chancellor is caught between the bond vigilantes on the one hand and the left wing of the Labour Party on the other. At first, she seemed to be laying the pitch for breaking Labour's manifesto, a rise in income tax, and then there was this policy U-turn, and we've had officials preparing us for a smorgasbord of tax rises. So it's on the front page of the UK newspapers this morning. She's bracing for a tax-heavy budget. It looks like she's going to take aim at workers, savers and pensioners. One of the biggest measures expected to be a stealth tax rise, freezing personal tax thresholds. But the big question here is, how much headroom does she leave against her fiscal rules? £15 billion is the expected figure. The market would like more, but already that is going to be politically painful. Never before has Labour polled worse than this at this point. But really, the arbiter of the success will, of course, be the markets. And we might not see the full market reaction until well after Reeves sits down. That's what history has shown us. Of course, the spectre of Liz Truss looms over Rachel Reeves, but we're also watching the currency markets. You've seen a huge amount of volatility in the pound-euro trade. You've seen traders piling into bets that you'll have lower pound against the dollar as a result of this budget. If Reeves can dance on this pinhead, balance the books and pull this off, actually, you might see a bit of a relief rally for sterling.
Yes, indeed. I mean, the pound is up 0.2% this morning. Lizzie, just checking on where we are, 131.91 going into the budget. And, of course, gilt markets open in around 15 minutes' time. Thanks to Lizzie Burden for that. And Lizzie opens up that conversation around gilt markets, and I think that is going to be where our focus lies. And one of the things I took away from yesterday's conversations was that one of the problems with this smorgasbord, this buffet of ideas on tax increases instead of one big tax increase, is just that it's harder for the OBR to make assumptions about, harder for the markets to understand. It's just more difficult for people to assess how reliable is this tax take going to be, because there's a lot of reaction functions you have to then process in. So that could be something that causes volatility in bond markets.
Is what she's doing inflationary or deflationary? Is it growth or growth negative? I think those are the questions, the kind of the fundamental question we need to answer. The fact that they're raising also the minimum wage, and also for the 18 to 21-year-olds?
Over 21,
yeah.
Increasing the minimum wage.
So you're seeing a big shift higher. That's going to hit hospitality. That's going to have a meaningful impact in terms of the inflation story as well. So I don't know. How do you read this? Is it a budget built for backbenchers, or is it a budget built for the market? Can you satisfy both of those two very important constituencies at the same time?
You also have to talk about what the reaction function of the BOE is going to be, not just in the long term in terms of kind of cuts or holds there, but also just in the short term, in the next 2 days. I mean, God forbid we have another Liz Truss moment. Is the BOE even prepared to step in the way they did 2 years ago in a very different inflationary backdrop, in a very different economic environment? That's a key question.
I saw a story about Liz Truss this morning, but it was about property development. It wasn't anything to do with the budget. Made me confused about which year we were in for a moment. But no, it is 2025.
It absolutely is. We're going to have full coverage for you throughout today and going into tomorrow. UK Chancellor Reeves, as we said, that budget comes at 12:30 p.m. in London time. Viewers in the UK and Europe can join us for full coverage and analysis as it happens. The party continues tomorrow. The opening trade, of course, will break down the numbers with key business and political voices on our budget special tomorrow. We're going to do the post-game analysis, the post-mortem, in about 24 hours' time.
Let's tell you what's coming up on the programme today. Victoria Clark, Chief UK Economist at Santander CIB, will be with us to share thoughts ahead of the budget then, what is anticipated, to answer some of Guy's questions. He was talking about growth and inflation. Peter Shafrick, Global Macro Strategist at RBC Capital Markets, will be with us to talk broadly Well, we'll dabble in the UK, but we'll also talk about the Fed, of course. Freddie Lake, managing partner at Latitude Investment Management. Lots to say about big tech, surely, but also about portfolio construction. Meg Hillier, chair of the UK government's Treasury Select Committee, will be with Lizzie a little bit later on in the programme. So a lot of conversations coming your way.
Absolutely. What else do you need to know this Wednesday morning? The US government has negotiated a 71% discount off the list price of Novo Nordisk's blockbuster drug Ozempic and Wegovy for patients on Medicare. This, according to an official statement. Individuals on the federal health insurance program already receive discounts off drug company prices, but the figures are not normally disclosed. These newly announced rates will be effective in 2027, though. President Trump says that Beijing has, quote, more or less agreed to pick up the pace and size of US agricultural purchases. Trump told reporters aboard Air Force One that Chinese President Xi Jinping will surprise to the upside when it comes to trade. Trump and Xi held an hour-long phone call Monday to discuss trade and the tensions between China and Japan over Taiwan. And Bloomberg is exclusively reporting that US presidential envoy Steve Witkoff, who will be meeting with Vladimir Putin soon, advised Russia on how to pitch the Ukraine peace plan to President Trump, just days after Trump announced a peace deal in Gaza. In a phone call on October the 14th that lasted a little over 5 minutes, Witkoff spoke to Putin's top foreign policy aide, Yuri Ushkov, to suggest they work together on a similar plan for Ukraine and that Vladimir Putin should raise it with Donald Trump. His guidance included suggestions on setting up a Trump-Putin call before Volodymyr Zelensky's White House visit later that week and using the Gaza agreement as a way in. Asked about Witkoff's approach, President Trump said he hadn't reviewed the call, but that he heard it was a, quote, standard negotiation.
That's a standard thing, because he's got to sell this to Ukraine. He's got to sell Ukraine to Russia. That's what a deal maker does. You got to say, look, they want this. You've got to convince them with this. That's a very standard form of negotiation. I haven't heard it, but I heard it was standard negotiation. And I would imagine he's saying the same thing to Ukraine, because each party has to give and take.
Where market's positioned when it comes to Ukraine at the moment, there are various ways of looking at this, but certainly Brent crude appears to be one of the ways in which the market is pricing in the possibility of a peace deal. Brent crude this morning up a little bit. In fact, it's been rising over the last hour or so. Euro dollar, another potential way of looking at this trade, though maybe some of the Central and Eastern European currencies, maybe a more direct trade. And DAX futures up by 0.7% this morning. I noticed that it looks like the defence stocks are catching a bid this morning.
Yeah, that could be interesting, couldn't it? And it was interesting to see oil prices did retreat yesterday. The market was taken quite seriously. Some of the chatter in the markets from other media around how close we are to some kind of agreement between Ukraine and Russia and the United States, crucially, around a peace deal. And the market did sort of go up a hill and seems to be coming down again now. But we are looking ahead to various meetings set to take place. President Putin seems to be meeting the US delegation in Moscow next week. So we'll see what happens there. And President Trump saying there is no deadline for him. He had put a deadline on the end towards the end of this week around Thanksgiving, hadn't he? But now that appears to have gone.
It has, and I think that it's really interesting because Vladimir Zelensky, to your point, is still trying to get that meeting as well. There was commentary in the last 24 hours about getting to D.C. in the next 5 days. Thanksgiving certainly gets in the way of those plans. I think what's also crucial here is you're talking now about how the European leaders are going to react, given that there is no one key voice of Europe. There is a meeting due today at 11:30 a.m. Brussels time, so 10:30 UK, with Kaja Kallas and some of the leaders in Europe to have a united position.
Yeah, President Trump talking about working on security guarantees with Europe. So we'll see who foots the bill and who puts forward the boots on the ground, if that's what is involved. Let's tell you what's coming up on the programme then. Some of the tech themes we've already touched on. As Google fully enters the AI race, we'll dig into the story as valuation concerns in tech ease a little. Plus, we'll also see how markets are pricing the possibility of Kevin Hassett leading the Fed. Up next, today's big story here in this region. Rachel Reeves is set to deliver her long-awaited budget. If you have any questions, please do get in touch. IB plus BBTV Go is the function to use. Beautiful skies over London this morning. This is Bloomberg.
When I I speak to my customers, they say, you know, we've had Brexit, we've had COVID, we've had the cost of living. They've built the resilience into their businesses.
The UK historically has had a great reputation for stability. At least you've known what you were dealing with. Even if you didn't like it, you knew what you were dealing with, and we tend to, you know, create this stable environment.
Well, I hope there's some consistency in the budget. The government have been very pro-aviation and pro-growth. They really recognise the valuable role that aviation plays, especially to an island economy.
We're the largest airline in the UK. We'll switch about 10% of our capacity, about 5 million seats, out of the UK into those countries, Sweden, Italy, reward those countries who are abolishing environmental taxes.
The average small business we support, they're about 10 employees. The person who's running that business is doing the sales, the marketing, the finance. They want that certainty to enable them to continue to run their business.
There is a lot of capital. To deploy capital, you need to be confident that you can invest something and the rules aren't going to change.
Even a dumb Labour government will work out that for an island on the periphery of Europe, the way to grow and the way to increase tax revenue is to get tourists onto the island first.
What would he have to say about a tourist tax? Business leaders there weighing in recently on what they want to see or what they expect to see from the budget a little bit later on today. I mentioned the tourist tax because that is just one of a number of possible announcements that has been floated over the last 24 hours. So we'll see whether that one comes to pass. Let's broaden the lens, though, and think more broadly about what this budget will deliver to markets, to UK politics, to the economy. Victoria Clark's with us, UK Chief Economist at Santander CIB. Victoria, nice to have you with us. Let's start by dealing with, you know, how much of an uphill struggle is this in terms of creating this headroom? She's talked about wanting to create headroom. Estimates out there that maybe she wants 15, maybe even 20 billion to stop having to do this all the time, coming back to markets with more. And this is made more difficult by the fact the OBR is expected to reduce productivity expectations for the UK and also failures to deliver cuts on welfare spending. So how much money is she going to have to try to find to deliver something today?
It's really hard to boost headroom because you mentioned that the assumptions have gone against them on productivity growth. There's things that they've walked back on the policy front. So the fiscal hole is pretty big. You know, it's certainly 20 billion, quite possibly, you know, edging on 30. So, you know, you start ruling out your big tax-raising levers, as it appears has been done, income tax, VAT. It's very hard. And I've had, you know, every spreadsheet under the sun going, trying to work out different permutations of this. And it's actually very difficult even to get your headroom to 20 billion. As we've seen with market moves, with, you know, a little bit of policy challenge, you can lose 5 billion in a moment's notice. So I think, you know, getting to 15 to 20, it's progress, but it's certainly not a big buffer if you're trying to use that as an opportunity to say, look, let's just have one fiscal event a year.
And that won't necessarily, get the debt markets off her back. What about fiscal drag? Is that where the story's going to be? It's quite dull. Nobody wants to write stories about fiscal drag. It's boring. Yep. Talking about brackets widening, and maybe it gets the party the ability to say, look, we didn't put up taxes even though more people will pay taxes. Is that where she's going to lean on?
I think, for me, yes, those are the two big things in making up the numbers are the freeze on thresholds in that very final year. And that's the thing that the opposition will kind of catch on and try and push on manifesto pledges. So it's not without risk, but I think it is relative low-hanging fruit. And the other thing is, in the final year of the forecast at the moment, they have spending rising in 1% in real terms. So I think they can bring that down. Both of those are things that happen in the last year, things that people may say, will they really happen? Do they look fiscally credible? And these are all questions that are being asked, having had that walk back on, you know, the use of the main income tax rates, because it is a much more backloaded, somewhat less convincing fiscal strategy.
Good morning. Growth up and down, inflation up or down?
So I think growth down in pretty much every year of the forecast. I've got a fairly big downgrade in for the coming year and smaller ones for the future years, but that's down. Inflation, I think, is a bit of a mixed bag, and it depends a lot on what measures come out today, because I'm quite confident that that there could be some push on the next 12 months of inflation. So that could help push the next 12 months of inflation down. And actually, if the government does some quite sensible things like dealing with indexation of inflation, then that could push the next couple of years. So inflation, I'm a bit less worried about. Actually, it could go the right way this year and next. Growth, I mean, that's the problem area.
Both of which point to the fact that the Bank of England should be able to cut rates, and reasonably aggressively relative to kind of where market is pricing now. Is that what you're looking for? And if so, what does that mean in terms of the debt burden also that the government is going to face, kind of coming back that way?
I think it helps the Bank of England. The problem that we've got is that we were going to get this big front-loaded tax squeeze, and I think the bank would have been really quite convinced by that as, you know, here you go, here's the front-loaded income tax, let's get on and cut rates more aggressively. Now, with inflation-reducing measures, things like taking energy bills lower, rail fares not rising, those things are also cash into people's pockets. So the bank will have to think about whether it feels that that's going to kind of up demand a little bit. And we've had news overnight that the living wage increase for the bottom end of the population is going to be quite big. So it's not slam dunk for the Bank of England. I do think it helps, though, because when you've got inflation at nearly double the 2% target, you've got inflation expectations on the bank's own measure at a record high. Anything that just mechanically brings inflation the right way probably helps that narrative. So I think it does increase the chance that the bank can move a little bit more in a front-footed way, not necessarily aggressively.
Victoria, sticking with the Bank of England, you talk a little bit about from the rate side. Talk to me about their kind of QT side. They're still engaging in QT. If there is, I'm exploring the doomsday scenario here because that's the exciting bit of this budget. If you do see a market freak out, similar to a Liz Truss moment or other iterations we've seen around the world, is the BOE in a position to actually intervene given the backdrop of inflation, given the backdrop of QT?
So I think that QT for them is very much something that they still feel is happening in the background, and their definition of what it will take to change their plans, their mindset on that is quite significant. I mean, you'd really be looking for some significant market disruption. I think disruption's the word there. They can do things. They can take a break from it, as you saw in the Truss era, and then get back to the programme. And for them, the kind of QT tool is very much separate from the interest rate tool. The interest rate tool is dealing with the inflation outlook and steering the economy on that. I think that for them, they'll just, anything that they need to do would be a break, and then the idea being that they get back into it, unless they see something that says there's a real problem in the market here.
But to your point of kind of going back, again, circling back to the rates picture that Guy was talking about, if you're not looking to cut rates and you are looking, or even to potentially pause QT, as you suggest might be on the table, doesn't that ultimately hurt the fiscal balance sheet as well? So it's really interesting because there's definitely an interaction between these QT decisions, which will get factored into some extent in today's numbers, and that will have consequences down the line for the fiscal outlook, whether that's recut in the spring or in October time. But the bank, to some extent, doesn't need to take that into account in its own decisions. The way that its framework's been set up is, thinking about what you want to do with your balance sheet, which for them has been very much about this shift to a repo-led balance sheet. Yeah.
So the QT, you continue with that plan, and you just take a little step out if you think that there's a market problem. But, the wider fiscal consequences, unless they're told otherwise, for them, I think, this is just not what we're trying to achieve here.
Busy day.
Very much.
My question is, what are you going to do tomorrow? Because we've been building up to this for ages. Victoria, nice to see you. Thank you very much indeed for joining us on set so early on what is going to be a busy day. Victoria Clark, UK Chief Economist at Santander CIB. Quick look at the pound. This is where we are trading. Remember, the actual estimates of this budget have been impacting the pound for quite some time, and the volatility we've seen has been quite significant. We're a little weaker over the last few weeks. Are we going to bounce today? Great coverage coming up. UK and European viewers can watch the live coverage and analysis of the budget. Starts at 12:30 UK time. Looking forward to it. This is Bloomberg. Wednesday the 26th, good morning. 30 minutes to go until the start of equity trading here in Europe, and futures look a little like this right now. We're expecting defence stocks to be on the front foot. That is going to give the DAX a little bit of a boost. It's going to be interesting to see how the FTSE 100 trades. I'm actually less interested in the FTSE today than I am in the 250. Let's see how that moves. But the CAC is up by 0.7%. That is the equity setup. Obviously, there's a big kind of read-through from what we saw in the States yesterday. But generally, we do seem to be back on when it comes to the equity market.
Yeah, is this all sort of a very vanilla expectation of more rate cuts coming through from the Fed, something we would be quite used to in financial markets over the last decades? Or do we see the spectre of more political intervention at the Fed? Is that having any impact? That was a question for bond markets yesterday, when actually we saw yields coming lower. Today, here in Europe, then, yields just a touch higher, but really not by much. On Germany, France and Italy, you can see a little bit of selling, and those yields are a touch higher. We'll wait for the gilt market to open in 29 minutes' time ahead of the budget later on.
Yeah, fascinating to see what's going on in the bond market. Of course, to your point, you have the UK, but of course in the 10-year space in the States, 401 on the US 10-year, and that might have something to do with maybe some regime change happening in Washington. I don't mean the White House. Bloomberg has learned that White House National Economic Council Director Kevin Hassett is being seen as the frontrunner to be the next chair of the Federal Reserve. It comes as a search for Jerome Powell's successor heads into its final weeks. Hassett talked to Bloomberg's David Rubenstein recently about the vacancy.
For me, I think that being director of the National Economic Council is my dream job. And if the president asks me to be Fed chair, then I'll do it. But if I'm not Fed chair, don't be disappointed for me, because I love the job that I have right now.
Kevin Hassett there speaking to David Rubenstein at the Economic Club of Washington a little bit earlier. Let's get a little bit more analysis here and bring in Bloomberg's Alistair Bull, who I've got to say is the expert in the field and for a very long time ran our D.C. Federal Reserve theme. Alistair, a pleasure to see you on this program. Just your initial take on what Kevin Hassett could bring to the role. He says he's happy in his current job. Would it really move the dial if he took the role of Jay Powell?
Well, good morning. Nice to see you again, Kriti. So, first of all, this is no surprise. I mean, Kevin Hassett's name's been in the ring basically from the get-go. He is a Trump loyalist, but he's also a credentialed economist who's been around Washington policy circles for years. He advised McCain in the 2000 presidential campaign. He worked to the Fed back in the day. So, I mean, in some respects, he's the obvious pick. Trump knows him. Trump trusts him. He's on board with Trump's policies, but he's familiar with the institution. And he's certainly, a respected economist. I think that this probably is the way to thread the needle. It's not obvious that the markets would take this in a bad way.
Yes, and lingering on that, Alistair, the extent to which he is a conventional choice versus not being a conventional choice. Good morning. I mean, is he just as would he be described by those who know him, do you think, as maybe just as dovish as some of those who serve on the FOMC now, or is he much more so? I mean, trying to understand to what extent he would behave in a sort of conventional manner that the market would understand.
So I don't think we've heard him say anything alarming. His view is that he'd cut interest rates, but there are people on the FOMC now who say the same thing, and the data is mixed. I mean, there's an argument on both sides. There's an argument for waiting, and we've certainly heard the Fed hawks talk about that quite a lot, but we've also heard recently from New York Fed President John Williams saying he sees room for a cut. We've heard San Francisco Fed's Mary Daly say the same thing. So it's not as if the whole FOMC is against moving, except for the people who Trump put there himself. So, I mean, yeah. So, and in terms of saying things that would really freak markets out, I don't think we've heard him do anything like saying we should take rates down to sort of 1 percentage point or whatever. I mean, the president himself has made some pretty startling remarks about policy, but I don't think Kevin Hassett has at all.
Alistair, we'll leave it there. Thank you very much indeed for the update, Alistair Bull, on what we are expecting maybe from a Hassett chair. What is the Hassett trade? Is it gold up, steeper curve, dollar down? What do we think on the rate story? Peter Shafrick, global macro strategist at RBC Capital Markets, joining us around the table. Good morning.
Good morning.
What do you think the Hassett trade could look like?
Well, it's probably on the margin slightly bullish for the front end, but I agree. I mean, it's not a complete game changer because when you think about it, I mean, what you see at the moment is that it's a committee, and the committee is quite split, and there's the two forces. And as long as it's not clear,
doesn't the chair have huge influence? Couldn't the chair, a kind of Trump-backed chair, come in and shake things up?
Well, I mean, the chair has influence, but we see it now.
Yeah.
I mean, it's not that Powell is saying this is what we're going to do and the rest is just going to fall in line. That's just not the way it works. So I still think, or we still think, that at the end of the day, it's a committee choice. And actually, I think that's what the market is thinking as well, because over the last couple of days, what we've seen is that the terminal rate hasn't actually moved all that much, even though obviously December has moved around a lot, but the terminal rate hasn't really come down all that dramatically.
December?
Well, we actually think it's not going to happen. But then when you say since Williams came out and the push from the Wall Street Journal, the market has probably swung the other way. So, but I think it's a pretty tough call for this one.
Can we just go to the camp of the Doves, the John Williams and cohort? Just the argument that they're making in favor of a cut in December. What is it targeting exactly? Is it targeting weakness in the labor market? Is it targeting the repo funding pressures? What is the case for a cut?
Well, I think the main economic reason that they're bringing forth is the weakness in the labor market. I mean, I would still argue that there's a difference between the labor market being weak and the labor market softening, because it's all the question about where's the supply of labor going and all of these things. But in any case, the main argument here is the softness in the labor market. But I think it's quite interesting, because even people like Waller, who follow that argument, have then said, well, even if we go in December, we might have to reconsider what we do in January. So it's not that all of those people who are arguing for a cut in December all of a sudden say we just have to keep cutting to, maybe apart from Mirren, of course, to very, very low level. That's not the case.
I'm glad you mentioned him, because I wanted to ask you about him. So Myron talking about the US economy needs large interest rate cuts, plural. I mean, we know he's been an outlier. We see that graphically displayed on dot plots.
Yes.
So he is an outlier, but to what extent is he shaping thinking, do we think, at the Fed?
I think this is the way to portray it. He's an outsider. And when you look at particularly the last dot plots that came out, he visually stood out. And then when he gave the speech afterwards, nobody else sort of embraced that kind of thinking. So I would still categorize it as an insider-outsider thing. And as long as you don't have plenty of people that originally came from the Fed have the same kind of thinking, we can talk about 25 basis points here or there, but not sort of the Mirren type level. So I think he's still sort of a category of his own.
When we're talking about some of the, I'm going to go right back to the hawkish narrative here, given that we've done the dovish one. Talk to me about the repo funding pressures. Should we be how important is that? We've seen spikes before. There's a big concern in the market that going into year end, when you do see liquidity tighten, when you do see some of the funds come off the balance sheets, especially at the banks, that these repo funding pressures are ultimately what's going to crack the stock market rally that you're seeing. How dependent are financial conditions on repo funding pressures not stepping out of line?
So I think we have to differentiate between, on the one hand, as you said, like going into year end, you have very temporary funding pressures. I mean, they are...
Well, they've been going on for like 2 months.
No, but that's exactly my point. So if you have just like very quick spikes into month-end, year-end or something like this is something that the Fed will not ignore, but is not necessarily have to set policy for it.
Yeah.
If you then have a situation that's much longer lasting, we had one in 2017, we might have one now, where you actually come to a point where there's not enough dollars going around, that's a different story, and the Fed can and will react to it. In fact, they have reacted to it by stopping QT. And they have also said that, in a point in the future, they might have to provide more reserves again, because it's all about the provision of reserves at the end of the day. So I don't think we're in a situation yet where it's a real crisis, but it's definitely something, if it's ongoing, that the Fed will have an eye on for sure, and potentially will eventually restart providing reserves.
Peter, can I take us across the Atlantic to the UK,
Sure.
but actually keeping a lingering thought on the United States, because I think it's interesting that we keep having these big set-piece UK events on days when we don't have all of America's attention. And I wonder if there are risks for markets in the fact that, we had an election on July 4th, and now we have a budget on the day before Thanksgiving. Is there a risk of low liquidity in these kinds of markets, or do you think that there are enough of us paying attention?
I think it would be all right from a liquidity point of view, and I don't necessarily think it's the lack of U.S. participants, because at the end of the day, the vast majority of the holdings is still within sort of the U.K. So I think from that point of view, we're going to be okay. That doesn't mean there's no risks around, of course, because with events like these, there are always risks.
And the gilt markets, actually, I think you and other guests have been pointing out to us in notes ahead of our conversation that actually the gilt market issuance for the end of this year and into the first quarter of next year, or the last quarter of the financial year, looks quite light, and that could be something that plays to the markets, to the government's advantage or stability's advantage.
Absolutely. So there's two things to consider here. One is like the rest of this fiscal year, and as you say, we're most likely going to drop off in terms of supply, but that's mainly because we already have we've overfunded a bit. So that means we will come down. We actually think that the expectation for the funding requirements will go up for the rest of this fiscal year, but because we've overfunded, the auctions are still going to go down. That's one thing to consider. But then the other thing, which I think is probably even more important for the market, is what's going to happen in the outer years. And here the expectations for us is that the funding needs will go down. That mainly has something to do with the expectation of the active QT portion that the OBR is going to take. We reckon that's going to come down. Because that's going to come down, the losses that the APF will be having is going to come down. That means the indemnities are going to come down. That means less funding pressures in the outer, or less funding needs in the outer years. And that should also be a positive for the gilt market.
Where are rates going to bottom in that cycle?
In the UK, we actually have just taken our bank call down to 325, right. So which is below the forwards. We think there's very good reasons that the bank can cut a little bit more than what the market's currently expecting. And that presumably as well is another factor into the gilt market trade. Certainly, yeah. In terms of what we're going to see on inflation in the UK, though, how much clarity do we really have in terms of how sticky or not it is right now, and how much could this budget change that? So one of the things is very clear. Headline inflation will come down. We know that. Yeah, that's exactly mechanically. So that then leaves the question: A, how low will it go? We reckon by the end of next year we're going to be around about 2.5. And then there's the bit about the intrinsic part, which is sort of the service inflation, wage inflation. But we've seen quite a bit of a loosening of the labour market. So unemployment has been going up. We've seen the participation rate going up, and people not finding jobs. That should loosen the upward pressure on wages, and by extension then on service inflation, we reckon.
OK, we'll see if that transmission still comes to pass. Peter, thank you very much. Peter Jaffrick, Global Macro Strategist at RBC Capital Markets, setting us up for the UK budget and thinking about the Fed narrative. Thinking about the budget, though, a different take on the budget. Check out Merry Talks Money. Is that supposed to be Merrin? That is the name of the podcast from Merrin Somerset. We're podcast on Bloomberg, UK's wealth editor, of course. Merrin Somerset Webb discusses your money and the world of investments in every week, and you can get that in your usual podcast feed. Coming up on the programme, we're looking at UK high street retailers ahead of the budget. Your stocks to watch next. This is Bloomberg. Welcome back. This is the opening trade, 7:46 here in London. European equity markets looking to pick up on that positivity around the possibility of more rate cuts from the Fed, it would seem, and are expected to go higher. Is there a bit of a reference to the possibility of peace in Europe as well, and Ukraine? We will keep that under review. Let's get to Kriti, though, and find out what has caught her eye, because here in the UK, it's a busy day for fiscal matters. Kriti.
Peace in Europe, what a prospect. Let's talk about what's going on in the UK, to your point, Anna. And it's a chart that I think we talked about quite a bit here in terms of positioning going into the UK budget. It's worth revisiting. And it's really just the red on the screen that you're seeing. Now, people, and I say investors, have been fairly bearish sterling for quite some time against both the dollar and against euro. And that's what this is showing, that going into this budget, that positioning has actually increased. Those shorts on sterling have actually increased. And that might just be what's driving some of the price action lower and lower to that 130 level. Does it break it? The other side of this argument is simply that there's so much bearishness going into it. Once you're done, once the risk event passes, some of this goes in the opposite direction. So you do see ultimate strength when it comes to the pound. But I think this is interesting here because we have to go all the way back and to look at this kind of green on the screen, because this is kind of the Liberation Day chaos that we saw in U.S. markets, where you did start to see yields skyrocket. You saw weakness in the dollar, and that's what turned this all around. How much of what happens after the short positioning has to do with, yes, what's going on in the UK budget, but also maybe some of the dovishness and positioning happening out in the States as well, Guy?
When does the market react to all of this is my question. And that's what I can't figure out today. Do you react during the speech? Probably unlikely. Do you wait until you've had the OBR briefing? Do you look and see what the debt issuance story looks like? Do you have to tot it all up and figure out what the implications are and then try and understand the derivative second round effects? I don't know. I don't know when the market reaction is going to come. Let's try and answer that question with Scarlett Montgomery-Koenig from Bloomberg's MLive team. When do you think we're going to be reacting? Because this is my conundrum with all of this. It's all of this is hard to. There's a lot of kind of small bits, and then you don't know what the derivative effect of those small factors are going to be.
Yeah, I mean, I think there's going to be a phased reaction, and we certainly will get a reaction today, but whether you get a longer-term reaction really depends on what we actually get, which we don't know that much. In terms of what I'm watching, it's three things. It's how much fiscal headroom do you have? Yep. Is there credibility behind the budget? And what are the economic implications? In terms of the fiscal headroom, it's pretty simple. We got 10 billion last time. We want more than that now. Yep. Somewhere closer to 15 to 20 would be quite positive, I think, for both the pound and gilts through the risk premium.
What's priced? Is 15 priced?
I think this is quite a hard thing. I think particularly with the pound, there's a lot of pessimism priced. So all the talk around the budget so far has been Reeves has this tightrope she has to walk where growth is either going to get much worse or she's not going to have fiscal credibility, and both options are negative for the pound. I think in reality, markets are forward-looking. So we've had a reevaluation already of 2026 growth prospects in the UK, and that's found into negativity in the pound. Certainly, if you look at Euro GBP, you can say that there's some kind of risk premium priced. It's very expensive relative to interest rate differentials. You're also at a level that's kind of comparable with the Liz Truss crisis. And I think we shouldn't be, comparing this fiscal scenario to that scenario. So if we move past this kind of fiscal scarring that I think actually stemmed from the Liz Truss crisis and just hasn't gone away, and we move past the uncertainty, then you can certainly get a relief rally in the pound.
Yeah, I mean, it's a nice risk-on day to do anything, isn't it? I mean, due to things that nothing to do with the UK, due to expectations of a Fed rate cut, Skylar. How has your thinking around a rate cut been shifting based on the weakness in the data that we've seen in the United States?
Yeah, I mean, we haven't actually gotten that much substantial in the last week, and it's been funny how we've had this big turn, because I think you should probably take more signal from Powell than from the Fed figures that we've had in the last week that have shifted things more dovishly. And I haven't seen anything super concrete in the data that makes me think that a December cut is absolutely certain. So I think because we've now moved to the other end of the scale, the risk is very much that, you don't get that cut, or that cut doesn't, become as certain as you get more data come in, as you get closer to the event, as, we enter the blackout period and people are more uncertain. And maybe the surprise comes on the actual December meeting. But I think we're still going to be in this choppy environment, and it's not necessarily a straight line where dovish bets mean that the equity market goes up.
Skylar, very quickly, I'm putting you on the spot here. And just talking about how jittery these markets are, whether it comes to the UK or to the Fed, we're talking about this 15 billion figure, 15 billion pound figure. If the market comes in, or if the budget comes in less than 15, how violent is the bond market reaction, and is that contagious to the rest of the world?
Yeah, I mean, it's interesting because what you've seen is that government bond correlations have actually come down as you've had deglobalization, more realization, and risk premium elsewhere. But I think certainly there is a feed through, and the feed through is more to those countries that are kind of fiscal misbehaviors. So it's your Japan, it's your France. That's where you can see more of that tailwind because people think about risk premium again and they go, well, maybe I need to price it here.
All right, Skylar Montgomery-Koenig from Bloomberg Markets Live. We thank you so much. You get more up-to-date analysis from her and the team. ML Ivy Go is the function on your terminal. Let's go from the macro to the micro. Get our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. UK stocks will be in focus throughout the day, of course, as we await this budget later. But for now, let's zoom in on some of the companies that will likely to be most affected by the minimum wage increase that was announced by the government just yesterday. So we'll be keeping an eye on supermarkets, of course, like Tesco and Sainsbury's, but also high street chains like Greggs and pubs like Wetherspoons. Those are companies that have usually very large young workforces, so will be particularly impacted. The problem with this minimum wage increase, according to economists, is that this is already one of the highest globally, and productivity is still lagging behind. So this creates an imbalance which is tough on both workers and employers. Moving on to SAP, which is a German software giant, has been accused of stealing some trade secrets. So this an AI company based in the US has accused former executives of stealing secrets related to the design and implementation of a supply chain management software. We've seen SAP shares already struggling a little bit over the last year. We're down about 8%. So we'll see how the market reacts to this legal trouble that SAP is maybe finding itself in. And finally, Engie, the French utility, could also be weaker today. It is set to lose a bid for a multi-billion euro contract to supply to continue operating the heating network in Paris. This is a company that's been doing actually pretty well so far this year, has been outperforming some of its peers, but losing that contract will actually be quite a big blow to a company that's been already trying to streamline its operations and refocus on key markets. So that's definitely a stock to watch today as well.
Chloe, thank you very much. And Chloe was just mentioning SAP. I should say that SAP has put out a statement about these allegations, says it's committed to the highest standards of business ethics and respects the intellectual property rights of others. They're going to review the complaint and will respond as appropriate within the legal process. So there's that one. The broader picture for European markets is actually higher, but is it anything to do with Europe? I mean, it might be if the geopolitics, if there is really anything of substance behind the conversations that are going on at the moment. It could be very European, or it could be entirely US-driven and just a Fed narrative.
Defence stocks look like they're going to move higher.
Yeah.
That feels like a negative read, not a positive read on the Ukrainian outlook. US futures are also positive as well. So Nasdaq futures are up by 0.5%. You've got S&P futures up by 0.4%. So it still feels like we're in a risk-on kind of environment. The Hassett story seems to have largely been taken okay. Or is the market still not quite convinced that he's the name in the frame?
We're 6 months away. We're 6 months away. That is in Trump years and in Trump time. That could be 5 years. So the conversion is interesting. I mean, the UK I think is still fascinating because you are actively seeing nervousness in this market in a risk-on environment. You are seeing a change in the pound. You're seeing underperformance of FTSE 100 futures, and we're going to get an early read in about the gilt market as well in just about 5 minutes' time.
Yeah, absolutely. We're keeping an eye on the gilt market, of course, as we've been asking all morning. When does the market's verdict on the budget come to pass? Maybe it's in the moment, maybe it's hours later, maybe it's tomorrow. We've got all of those market lenses covered for you. We'll be back with the opening trade here in Europe next. This is Bloomberg.
Wednesday morning, what are we looking at? This is the trade from yesterday into today. Europe went out here. There's a little to price in, therefore, maybe 0.5% on the upside in terms of where the US markets closed yesterday. Yesterday was, actually the breadth was okay yesterday. It was a tech trade that was back on. It was a Fed rate cut story that was back on. Feels like we've kind of reversed some of the negativity that we saw last week. How much further do we still have to go, Kriti, I think is an open question. But yesterday certainly felt all right.
Catch-up trade. I think that's the easiest way to explain this. Eurostoxx 50 futures higher by about 0.8%. But your underperformers right here in the UK, we are, of course, on watch for what Rachel Reeves is going to announce in her budget. Maybe a little bit of caution priced into these markets. We're going to see how broad that move is or how broad that reaction function is in just a moment. But, Anna, a firm focus, of course, on DAX futures as well, because we are monitoring what the peace plan talks look like for Ukraine. That's likely to show up in defense stocks. Already DAX futures higher by 0.6%.
Yeah, we'll absolutely watch defence stocks with that in mind. I saw there was quite a division between the way that the defence names reacted to yesterday's news flow. Renk at one end and BAE at the other. So we'll see if we get any more coordinated movement there. Let's have a look at some of the other stocks and sectors in focus. UK stocks in focus, well, of course, budget day. So that's going to be the case. But that's going to be the case as we go through into the afternoon as well. So we'll keep an eye on all of the UK names with the budget in mind. Novo Nordisk is also in focus as we're looking at the US government negotiating a 71% discount from the list price of Novo Nordisk's Ozempic and Wegovy for patients in Medicare. So we'll certainly keep an eye on whether that has an impact on Novo or is some of that in the price. Engie is also in focus as well. The French utility, it said it's set to lose its bid for a multi-billion euro contract to continue operating Paris's urban heating network. That sounds like it could be a negative guy.
OK, here we go. Time for the market open this Wednesday morning. Budget day here in the UK. What else is going to be a factor in terms of the trade that we are watching? Let's find out. Let's see how these individual markets are going to open and what it tells us about the story. FTSE 100, bunch of factors that are going to affect this market today. Clearly the budget, maybe a more 250 story, but the pound affects what happens with the FTSE 100. We've obviously got kind of how business is going to react to this story as well. That will come later. I think you've also got the defence story again feeding through there, but we'll see maybe more of that in Germany. Stock 600 up 0.2%. FTSE 100 up 0.2%. Do we get outperformance in the CAC current? We do, up 0.6%. The IBEX is up by 0.3%. Is a little to price in from the States. Does that continue? At the moment, US futures look fairly positive. Kriti, what are you seeing on the sector story?
Well, it looks like it's a little bit of a mixed picture here in terms of a sector narrative, but it is the heavyweights that are driving this market higher. So you're seeing your ASMLs, your Novo Nordisks, your LVMH all moving here. And you can see that. It's kind of red on the screen in terms of the sector story. I think what's really fascinating is, of course, you do have a technology catch-up trade here. So the Schneider Electric, for example, the ASML, that's going to be a key piece of this. To the downside, though, and I am looking at, again, not to use a budget term here, but a smorgasbord of stocks. Your biggest index weights this morning are Nestle, Shell, Unilever, Diageo. I can make a kind of a defensive stock trade on that. I'm not really sure what Diageo is doing in there.
Right, yeah. I mean, it does have a risk-on feel, doesn't it, with technology and basic resources as the best-performing sectors this morning. But I think industrial goods is, and it does feel as if this maybe then is a pickup on the Fed narrative, an expectation about lower interest rates, and that fed through from the US into Asia and now here into Europe. And it isn't so much about expectations of any possibility of peace in Ukraine, because, as Guy pointed out earlier, the expectation had been that we'd see defence stocks go higher this morning, and we are continuing to see that. So Dassault, Leonardo, Saab, Thales, BAE, all of those moving higher by more than 1.5%.
Are we just waiting? Are we waiting for the budget? Are we waiting for something concrete to trade on? As you said earlier, Kriti, it feels like a catch-up trade a little bit in terms of what we are seeing, maybe a little bit of an unwind of positions we saw last week.
Yeah. It's Thanksgiving week.
Yeah,
I was trying to say, is that kind
where's our turkey?
Where's kind of, is there an obvious trade on at the moment, or is this just a holding action of a market that we're watching kind of develop here? Wednesday into Thursday into Friday. Thursday, Friday are going to be quiet.
Very excited to be anchoring those days.
Yeah, unless, of course, the UK budget delivers something that is a surprise, and then you get light liquidity, and then things could get fun.
And speaking of the UK budget, the FTSE 250, which I know you had pointed out earlier, is actually outperforming. Higher by 0.3%. So I wouldn't call it major outperformance, but relatively to the FTSE 100. And we are also seeing a move in gilt, rising at the open, climbing 4 basis points. We're looking at 4.5% on the 10-year yield when it comes to that UK asset. Compare that to what you're seeing in the rest of the world. Not as big of a move. So something to keep an eye on. It looks like it's pared back that initial 4 basis point jump, but now only higher by 2 basis points. But again, you can see people are watching the UK budget with as much excitement as we are. Let's get a little bit more analysis this morning. Freddie Late, Managing Partner, Latitude Investment Management, joins us around the table. Freddie, pleasure to have you. Happy Budget Day to you. Happy early Thanksgiving Day to you as well. Let's start with the UK budget then. What is the blind spot here? How do we approach 3 o'clock today, 12:30 today?
Who knows? Look, I think the biggest issue here is common across a lot of countries. There's too much debt at the government level, and one country or some countries are going to struggle under the burden of that at some stage. And the interesting thing today will be to see how well Rachel Reeves has managed to manage the expectations. There's been a lot of leaking in advance of this budget. A lot must be in the price, but borrowing is going to go up, spending's probably going to go up, taxes may go up, but a lot of people are trying to leave, so we're not sure how the tax receipts will actually come through on that. And I'm a bit fearful for the pound and for gilts over the medium term. I don't know on today because, a lot could be in the price, but I think the sustainability of the trajectory we and other countries are undergoing is quite hard to see.
When it comes to, let's just broaden this lens out here. I was asking some guests earlier in terms of kind of the contagion effect. I think when it comes to UK assets, we're really looking at kind of the domestic story, the domestic read-through as well. But when we start to look at the gilt side, the kind of bond market, the BOE reaction function, how much of what happens in the next 24 hours here in London is going to end up showing up in European assets and arguably in the US assets as well, given this week is Thanksgiving?
So if I was another central banker, I'd be watching pretty acutely what happens here. We had the Liz Truss moment 3 years ago. I'm not suggesting we necessarily have another one of those, but yields are already at that sort of level. How do you react to this? And at some point, central banks can't continue to keep bailing out governments without a risk of a currency crisis or a risk of major inflation. And so watching first how the markets react and seeing how those bond yields move will be very telling, I think. And the contagion could be very real. If you see big moves, most bond markets tend to move in a pretty synchronous way around the world. And it isn't like Japan or the US or Europe don't have their own levels of indebtedness and issues with slower productivity, maybe outside the US.
So thinking about UK exposure, good morning to you, Freddie. I feel like I've talked to you about your holding in Tesco many times in the past, and you still have it, I think. So is that a confidence in the UK consumer despite everything, or is it just that this is the retailer that will make the most of a challenging situation?
So we've owned it for 10 years, so it's not sort of a call on the budget. But I think it's much more down to Tesco's competitive position and their execution within that industry, and also the major weakness from Asda and Morrison's since their LBOs. So I think it's more that whatever happens to UK grocery, I believe Tesco will be a winner. There's definitely things that could come through this budget that could affect them negatively. It could affect the UK consumer full stop. But actually, there's an argument that Tesco's and the main grocery channel could be beneficiaries when you look at how much is being spent on restaurants, on takeout, things like that, that could move back to the grocery channel.
Yeah, and thinking about your portfolio, I was looking at how it breaks down. You've got that bit of UK consumer in there, but you've got French construction, you've got auto parts in the United States, you've got health supplies in the United States as well. Obviously, a very international picture. How do you think about US tech at the moment? That doesn't scream out from your portfolio, and yet that's where a lot of the conversation has been over the last year. So how do you think about what we've seen and what we're about to see on US tech?
So technically in the technology sector, we've had nothing for the last 2 or 3 years. We do have Google, which is obviously a tech stock in reality, and that's the only one we've really been exposed to. It's had a great run recently. But in general, what we look at when we look at the technology stocks is a much less certain future. AI could be fantastic, but the capital expenditure is coming in up front and the payoff's uncertain. So the sort of range of outcomes for tech, in our opinion, has widened, and the confidence that you can have in their future is just harder to call. And yet the valuations are at highs, not lows, to compensate for that. And on the flip side, a lot of the rest of the world, stocks that are great and have great histories, like some of the ones you mentioned, I think are trading at real discounts to their history, to their fair value. And I think, what we're seeing this year actually is this is a great market because markets have been broadening a lot this year. Tech still dominates the story because they're so big, but there's lots of other large cap stocks that are up 30, 40, 50%, still inexpensive, delivering, growing, not going to be threatened by AI, probably not a beneficiary either, but just carving their own path. And we're focusing on those.
Why do you own Google?
So I've owned Google since 2013. So large number of reasons since then. Our view here has basically been, and my view on this hasn't really changed this year. If AI becomes a big story, which it clearly has.
Yes. Tick.
Did you say that in 2013? That was good.
Yeah, exactly. I believe through their DeepMind business, they actually have the wherewithal to compete on any of the kind of technology advancements, which is what they're proving out. Once you have the tech and the models, what do you really need to succeed? You need data, compute, and distribution. And they have the 3 best assets in that. They have obviously the data, huge amount of compute through GCP, and we're seeing now through their tensor processing units that they're now selling to Meta, they actually have even better compute than most, and they obviously have all of their distribution through Gmail and Google. And so I've always felt that they would compete. They can absorb the capex that they're spending back into their cloud business should it be overspent, which it probably will be, and that search therefore won't be threatened.
Is it a hardware business or a software business, and does it matter?
I still think it's a software business, backed up obviously by this infrastructure behind it. I mean, they sell some hardware, but I still believe it's more of a software business. I don't know where Waymo will go.
Do you think it's recently being... OK, but the TPUs, the ability to compete with Nvidia, does that make it a hardware business, and is that a more valuable commodity, looking at what Nvidia does, than maybe you originally perceived it to be?
Yeah, I mean, I think that's a wonderful proof point for that underlying decision to have developed their own chips and built their own chips out. And, I'm a big believer, I don't mind if a business wins through being capital intensive or capital light. They can both be very successful models, as long as the capital expenditure is well spent. And I think what we're seeing with the TPUs is it has been, and we wait and see slightly on the AI data center capex, full stop.
When it comes to some of their technology build-out, though, Alphabet is still number 3 in terms of cloud distribution and cloud adoption. They've tried to break into and capture more market share, and they haven't been able to get there. Why are you confident they can do it in the AI space when they haven't proven they can do it to the same extent in the cloud space?
So it's third in terms of size, but in terms of attractiveness and the current growth rates, it is kind of outgrowing the peers. And when you think about the 2 main peers, which is Amazon's AWS and Microsoft's Azure, Amazon still runs a very basic product. It's still a lot of hard disk drives versus, major fast chips. It doesn't have the same kind of application layer. And obviously, they basically built it to sell to themselves and use for their own system and then have outsourced it. So that's kind of the workhorse as we see it. Azure is mostly captive Office. We use Office at work, so of course our cloud is Azure and it just ties in. And then I think when you talk to people about running, really kind of cutting edge software and application layer systems on these clouds, GCP, Google's product, seems to be the more attractive. So it came from a lag. They started building it way after AWS and then even after Azure. Azure and AWS both had a huge amount of their own business to push through to get scale. But I would question some of the Microsoft numbers in particular recently in terms of, they're giving away compute to all of these businesses in which they're doing this sort of slightly circular financing arrangement like OpenAI, etc. So we think their growth rate is actually probably going to be stronger and more genuine over the next 5 years.
Well, what I love about some of these tech companies is even though they are software or hardware companies, as Guy mentioned, they're leaning into AI. Some of them, including Alphabet, are still very dependent on ad spend and the consumer and the real economy. So from your perspective, how's the real economy doing through the lens of how much money they're spending through Alphabet?
So it's slightly tricky when you're looking at the ad spend through Meta and Google, because for the last 10 years, pretty much since I bought it, it's been deflationary, as in it was cheaper to advertise through Google. And what you've seen in the last couple of years is a major inflation, a sort of exploitation of this market position. And actually, we're seeing quite substantial price increases per click, if you like, going through the system. So the ads growth is very, very strong. But that's not really a volume point to your kind of demand question. But it is a spend point. People still have to spend that much money. I think the issue we would have is that some of the more speculative advertisers may get washed out in a kind of down cycle. So there's a lot of crypto, a lot of small Chinese, sort of
Are we there? Are we in a down cycle?
No.
Are we headed to a down cycle?
Who knows? But if we do, Google may be more cyclical than it has been in the past, is what I'm saying, because I think it could be.
Freddie, great to see you. Thanks for
see
talking about us. Always a pleasure. Freddie Lates, Managing Partner at Latitude Investment Management. Thank you very much indeed. The Core 6 looks a little like this Wednesday morning. We have generally a strong bid across the markets. The more defensive end of the spectrum, let's call it Nestlé this morning, is a little softer. But you certainly see the defence names coming back quite strongly. Tech is also catching a decent bid. What has Chloe Melly got her eye on? Let's find out. Let's start with that defence story, Chloe.
Good morning, guys. So, defence is quite positive across the board this morning, with Rheinmetall in particular up 2.4%. This follows what was also another good day yesterday. It seems that those companies are reacting to those developments, or perhaps lack of developments happening in the Ukraine-Russia situations, with maybe those peace talks not progressing as well as smoothly as was expected. And we can see that reflected in those shares moving higher for that defence sector. Moving on to some names in consumer staples. So Pernod Ricard, which makes spirits, and Henkel, which makes consumer goods like soaps and detergents. They are both down. Well, Henkel was down. It is now unchanged. But Pernod Ricard is down after a note from JP Morgan, which placed Henkel as an underweight rating and placed Pernod Ricard on a negative catalyst watch. So those analysts said that in the staples sector, they prefer things like beer, tobacco, and beauty. And unfortunately for those two companies, they are not part of either of those categories, and so they are down this morning. Moving on to WPP, which is said to be excluded from the FTSE 100, and it is down this morning. On the back of that, we are down 1.2% for WPP. It follows a series of setbacks for the company, including guidance downgrades and big account losses, and it is set to be replaced in the FTSE 100 by British Land, but it seems that that is not moving the shares very much for that company this morning. And finally, Neste, which is the oil refining company out of Helsinki, is up this morning after being upgraded by UBS analysts, and we are up 2.7% for that company.
Thank you very much, Chloe. Chloe Melly from our equities team, of course. Coming up on the programme, we'll check in on Novo Nordisk, the share price of that drugs maker, after Medicare negotiates a discount on Wegovy and also Ozempic. That is next. The stock is up by 1.1% though, so where is the news on this one still to come from? This is Bloomberg.
Welcome back to the opening trade. 18 minutes into the session, I want to bring you live images of Ursula von der Leyen speaking in Strasbourg at the European Parliament. And she's holding a plenary session at the EU response to airspace violations and sabotage of EU critical infrastructure. Of course, something that's very top of mind as we talk about some of the peace plans potentially being negotiated for the war in Ukraine. Some of the comments include that she won't accept limitations on Ukraine's armed forces. They need long-term security guarantees. They're also talking about having a starting point after the talks in Geneva. Nevertheless, we're going to continue to monitor the headlines coming out of that. In the meantime, though, you are seeing a market reaction when it comes to some of these defense stocks. Remember, defense stocks have technically moved higher when we have seen snags in the peace plan. It feels like maybe that might be part of the narrative that's driving the sector higher. Rheinmetall, for example, higher by 3% this morning, Guy.
Let's shift from defence to what is happening in the pharma space. Take a look at what is happening with Novo Nordisk this morning. This is what the share price looks like. We're up by, let's call it circa 1%. Last night, the US government said that it had negotiated a 71% discount on Novo's blockbuster Ozempic and Wegovy drugs for patients in the Medicare scheme, the federal health insurance program, remember, which is targeted at the elderly. Early? The opposite of early. Elderly. Joining us now, Sam Fazeli, Bloomberg Intelligence Director for Research and Global Industries, Senior Pharmaceutical Analyst as well. Good morning.
Am I early?
Just on time. Just on time. Always on time. Perfect. How much of this is new?
Well, so this is part of the Inflation Reduction Act. Every year...
Sorry, wasn't that Biden's plan?
It was indeed. Every year, and that's why there was no press release, no razzmatazz or anything last night. Right? It came out on a Tuesday. I think it was Tuesday, right?
Yeah.
The thing is that we have this stuff starting about 9 months, 12 months ago, negotiating for next year's list. So a lot of these prices that you've just seen on their reductions have been in negotiations for months, and they probably fixed a few months ago. Then, of course, on top of this, the president had a negotiating story with the Lilly and Novo specifically asking for lower prices. And those prices that were negotiated, $245 if I'm not wrong, are actually lower than this price because this was negotiated before. So this, as you can see from share prices, is not making any difference to any, because GSK is on that list, Pfizer is on that list, to any of the pharma companies, because they would have built it into their guidance already,
So this kind of number was largely known then, Sam?
Yeah, this is where these drugs prices are going for these two drugs.
But it does seem as if within this sector there is downward pressure on prices coming, in this case, from the US government, but maybe from others as well. And what do we know about the impact that's going to have on profitability at somewhere like Novo? How much can volumes offset that?
So my wonderful colleague Mikey Shah, who runs our obesity all singing, all dancing model, has done the numbers with our analyst who covers the epidemiology side of things, and has come back thinking that it could hit 2026 sales, this negotiation that they did with the president 2 weeks ago, by in the region of $2 to $3 billion top line. However, that all depends on what you assume in these models for the prices come down, how much gain you get on the volume. Not very difficult to push his volume up in that model and get back to where we were, or even above where we were. So, you know, we have this scenario building model that clients can work with. The point is, for the other pharma companies, as I said, I think they would have been cognizant of the other drugs, not Wegovy, not Zepbound, of the prices negotiated, and would have been in their guidance already. And some of these drugs are going off patent already. Ibrance is going off patent already. Bringing this price in for 2027 or whenever it hits is going to make a small amount of difference. It's great. Prices are slightly on the way down, but I think pharma companies can generally manage this pressure without too much trouble.
Sam, thank you very much. Bloomberg Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence, and, of course, often speaks to us on the pharmaceutical beat, so we appreciate his time. Let us talk about tech, though. Google has released new AI software and struck deals, such as a chip tie-up with Anthropic, that have reassured investors the company isn't giving up on its battle with OpenAI. Let's get more with our Bloomberg Intelligence analyst, Matt Bloxham, who joins us on set this morning. So, at the beginning of a real shake-up then in global AI hardware duopoly. Is that what we're seeing here, Matt?
To some degree, yes. I mean, yeah, so there's two axes to what's happening with Google. I think what people are really excited about is the launch of Gemini 3, which is their large language model, which seems to be a massive step up in the capability of Gemini and definitely ahead of OpenAI. And, lots of my colleagues here we use this every day and, definitely seeing noticeable improvements in Gemini versus ChatGPT, which if you'd asked us last week, we'd have probably said we were preferring to use ChatGPT rather than Gemini.
Wow, that's changed very recently.
It is a big, significant change. And then in the background, Google's was gone with what they call this kind of full stack model. So they do everything from the chips through to the software, and they have the cloud platforms. And now what we're seeing is that there's outside demand and a business model to sell their chips to other players. And the most interesting deal they've done so far is with Anthropic. So I think that clearly, if the AI bubble doesn't burst and this market continues to grow, there's plenty of space for both Nvidia and Google with their chips and others like AMD. But I think customers are welcoming this additional competitive tension that Google's bringing to the market. It kind of pushes Nvidia to be honest on pricing, and it also kind of alleviates some of this short-term supply constraints. Everybody wants more chips. If they can't get them from Nvidia, in certain cases they can get them from Google. Now, the Google chips are much more specific in what they can do compared to what the Nvidia chips are. Nvidia's kind of like the kind of general purpose kind of AI chip, if you like, and the Google chip's much more kind of application specific.
So that is the hyperscalers, the fancy new tech. Let's talk about the old guard of tech, if we can, for a second. We have HP and Dell coming out last night. One did well, one didn't do so well. Yep. One didn't talk about AI, one did.
Yes. So Dell talking about AI and lifting its outlook for AI-related server demand to 25 billion from 20 billion, lifting their full-year revenue expectations. So, both Dell and HP are kind of growing a lot through servers. And Dell's got a very important tie-up with Nvidia on selling a kind of overall AI server system. So, their momentum is incredibly strong. HP, I guess, a bit more tied still to the kind of classic PC hardware, but also big in servers, struggling and kind of downgrading their earnings outlook, blaming rising input costs for chips as a big part of that, but also kind of giving an outlook of having to cut headcount by about 10%, so kind of 5,000 or 6,000 roles over the next few years to kind of compensate for those rising costs, protect margins. The computing hardware market has always been brutally competitive, and they're having to kind of increase those kind of cost-cutting measures to account for that. And they're going to lean into AI tools to allow them to kind of make those job cuts. So kind of an interesting dynamic there.
All right, Matt Bloxham from Bloomberg Intelligence covering a swath of tech companies for us. We thank you so much. It's really fascinating that he's talking there about just kind of and we've had this conversation for a while, the Alphabet kind of taking over in terms of share price. But we had this conversation with Freddie Late earlier as well. There's still a massive gap where Alphabet has to kind of meet some of the Azures, the AWSs of the world.
Sure, so it's got to close that gap.
Yeah.
Do we, though, see faster AI adoption as a result of this? If you've got more competition in the market, does it allow actually this to be a good news story for customers and therefore, by extension, the economy, if you kind of park the labour market side of the story? If you start to get more sort of competition, prices come down, maybe margins get eroded a little bit, but is the net actually better for the economy? Does it come faster?
Yeah, if there's more access to chips, whoever is making them, and if they are cheaper, driven by competition, then just maybe. And making it make economic sense for companies is a big question.
Absolutely. We're going to continue to monitor the conversation in the technology coming out of the States. We are also going to talk about what's going on right here in Europe. U.S. President Donald Trump dispatched negotiators on those peace talks in Ukraine. We dive into the details next. This is Bloomberg. Welcome back to the opening trade. 30 minutes into today's session. Green on the screen across the board, but some of the momentum has already kind of come out of these markets. You're seeing fades across the board. Your outperformer this morning is the CAC 40. Your underperformer continues to be the UK market, though. Caution ahead of the UK budget guy.
What's more important, budgets or turkeys? And if you take a look at the volume story today, I suspect it's turkeys. Turkeys are having the biggest impact. There's the volume trade. As you can see, we're down by around a quarter. Is the budget going to change that here in the UK? I don't think so. Higher, lower, you've got 387 up, you've got 187 down. it's the volume story that I would maybe focus on what we're seeing here in Europe this morning. Gainers look like this. Tech is up, defence is up, luxury is also higher. There's a story that maybe we haven't talked about enough yet this morning, and that is what is happening on the China story and this boost to consumption potentially coming through from the Chinese government. Is that lifting LVMH this morning? Maybe a little bit. Rheinmetall's up by 2%. ASML, though, is the standout trade, up by nearly 3%. That's the heavyweight in Europe. Defensives are on the back foot. It's not turkeys, but it is chocolates. Chocolates down. Soaps down, beers down. That seems to be the trade this morning. Nestle, Unilever, AB InBev, all giving back ground as the market looks maybe towards that maybe higher risk, higher kind of beta defence trade and tech trade to lift things around here this morning. Anna, what else do we need to know?
Let's get an update on some of the other big stories we're tracking. The UK Chancellor Rachel Reeves unveils her budget today at 12:30 p.m. London time. A raft of tax hikes are expected as Reeves tries to plug an estimated £20 billion black hole in Britain's public finances. The Chancellor has backed away from raising income tax, instead opting for a slew of levies across the economy. Bloomberg has learned that the White House National Economic Council Director Kevin Hassett is seen by advisers and allies of President Donald Trump as the front-runner to be the next Federal Reserve Chair. Sources say that Hassett is seen as someone who would bring the president's approach to interest rate cutting to the Fed. Treasury's rallied on the news, pushing the US 10-year yield below 4% for the first time in months. Kriti.
You know, it's a really fascinating one to see whether or not Kevin Hassett is actually going to be a market-moving narrative when it comes to some of those conversations. There's lots going on in terms of that market move. When you're looking at the kind of direction of travel anyway, Guy, when it comes to the 10-year yield, 401, we've kind of been bouncing around that 355 to 410 range. Things are moving lower, though, ahead of potential December rate cut.
Yeah, is it the Hassett trade or is it the December rate cut trade that we're watching more carefully right now? Are we going to get steeper curves? Like this, the Hassett trade feels more like a front-end story than a back-end story. And it's going to be interesting to see how steep the curve could get were he to be confirmed and were he been seen to be having significant influence when it comes to being sort of his ability to sort of corral the committee to deliver on those rate cuts.
Yeah, it's a really fascinating one. And there's this also broader question, I should say, of what's going on between the bond market and the currency market as well, because they've been going in two completely different directions. Yep. How many people have we had on this program that has said dollar weakness is still going to be a 2026 story just as much as it was a 2025 story? Some of that might have to do not just with domestic policy, but with international policy as well. And that's where we go next. U.S. President Donald Trump has dispatched top negotiators for additional high-level meetings with both Russia and Ukraine. Now, Trump said he would only be willing to meet the leaders of those countries if talks yielded a so far elusive pact to end the war. He added that Special Envoy Steve Witkoff would meet with Russian President Vladimir Putin in Moscow, likely as soon as next week. Let's get a little bit more context on this story. Bloomberg's Brussels Bureau Chief Suzanne Lynch joins us now. Suzanne, just walk us through the latest here. We know there's a meeting coming up here in Europe at about 11:30 a.m. Brussels time between Kaja Kallas and several other ministers. How much does the European lens change the dial?
Yes, a lot of activity here in Europe today as the Europeans try to get this peace deal back on track. They feel that they did make progress in the discussions in Geneva and elsewhere with moving the dial somewhat on this peace plan, that original 28-point peace plan. We've in fact just heard from the European Commission President Ursula von der Leyen, who's had been central on the European side to these discussions. She's just been speaking in the European Parliament and she gave her first response to the talks. She said she welcomed the effort by Donald Trump, saying that after months of discussion it was good to have a text to work with, but she said this is just a starting point. She also gave some indication of some of the red lines the Europeans have. She said in her address to the Parliament just now that there should be no limitations on Ukraine's armed forces. She also said that a sovereign nation should not be carved up, borders should just not be changed, and that was also a red line. And she also spoke about meeting the financial needs of Ukraine, in particular that plan to use immobilized Russian assets to help Ukraine. She said that the European Commission is preparing a legal text on this. And as we know, there was a lot of panic in European circles when it seemed that in the original draft of the peace plan that the US would in some way be involved with using these the profits from the assets in the reconstruction of Ukraine. So now it seems that the Europeans are saying they're moving forward with this plan. They want to get it over the line. And Ursula von der Leyen saying just in the last few minutes there that the European Commission is preparing a legal text on this and does want to move forward with that plan.
Suzanne, you have obviously got your ear to the ground in Brussels and listened to all that goes on there. How quickly could Brussels, Europe, pivot from war in Ukraine to peace in Ukraine?
Look, I mean, I think this war in Ukraine, which has shaken Europe to the core, has seen quite a quick response from the EU in some way. We saw all those sanctions packages happening in relatively quick succession after the Russian full-scale invasion in 2022. We saw, for example, the discussion about using Russian assets. Initially, the Europeans said, no, we don't want to do this. The ECB in particular was very wary of this. And now Germany and other countries have come round, even though Belgium still has some questions. So we've seen Europe pivot again and again on this. So I think what we've seen is all hands on deck, really, since this shock peace plan leak last week. There is no doubt about it. The Europeans confirmed they weren't consulted. They did not have any heads up that this peace plan was coming. But what you're seeing now is the statement now by von der Leyen in the last few minutes. We've got EU foreign ministers convening today for an emergency meeting, and we also have the EU ambassadors representing the 27 member states meeting all day for meetings here in Brussels. So it does seem that things are moving here, but in particular the focus now for Europe is this frozen assets plan and meeting the financial needs of Ukraine, which, as we know, are huge, particularly as we come into the beginning of next year.
Suzanne, thank you very much indeed. Suzanne Lynch, Bloomberg's Brussels bureau chief. Up next, we'll be back to the budget. We'll talk about what Rachel Reeves is going to deliver and how the market's going to react. That's next. This is Bloomberg.
Welcome back to the opening trade. We are 41 minutes into a session that has some modest gains so far. The Fed rate cut expectations perhaps delivering some of that, but we are in wait-and-see mode when it comes to the UK budget. So let's check in on what's going on with gilts. At the start of trade this morning, 41 minutes ago, we saw the gilt yields jumped a little bit and jumped more than we were seeing in other parts of Europe. That seems to have ebbed a little bit now. We're pretty flat on the gilt story, but that's what we'll be watching as we wait for budget day to get underway. The UK Chancellor Rachel Reeves is widely expected to announce a range of tax hiking measures targeting the wealthy to fill a £20 billion budget hole to avoid breaking her fiscal rules.
Markets know my commitment to the fiscal rules is ironclad. Some people say that we should just sidestep those rules, that we can borrow more without consequence by simply reclassifying areas like defence or education. But no accounting trick can change the basic fact that government debt is sold on financial markets. There are limits on the price that banks, hedge funds and pension funds are willing to pay for our debt. And we are competing constantly with other countries also selling debt.
November 4th feels like an epoch ago. For more on the markets and the political impact of today's budget, we're joined now by Sam Umstead, co-editor of Bloomberg's Markets Today blog, and Rosa Prince from Bloomberg Opinion, who writes often on UK political matters. Sam, let's come to you. The whole team will be gearing up then to blog away through this. I mean, is there a chance that you spend a lot of time reporting on the things she says that she's going to do, but they don't necessarily raise much money, and actually we're back to a story of fiscal drag, and that's what's going to do the heavy lifting when it comes to filling holes?
Yeah, I think so. So this is the word that's being used constantly now is smorgasbord.
Mm-hmm.
You know, there's a huge number of different tweaks and tinkering over here, and sort of freezing thresholds here, and nothing in there that's sort of this one big narrative for people to grab onto. So yeah, I think the likelihood is you're going to get a huge amount of news. So lots and lots and lots of different things. Many things we haven't even touched on, on the blog, for example, like different duties, what they're going to do around those sorts of things, stamp duty, property, all sorts of things like that. Get to the end of it and actually working out whether it's met what the market wants to see in terms of the headroom. And understanding really what the implications are of it going forward is going to be very difficult to do.
Rosa, good morning. Do you think the Chancellor's more interested in the market reaction or the reaction of the backbenchers?
Good question. I definitely think it's those two things rather than what she will be claiming today, which is this is about helping working people. Because it seems to me that they are being clobbered from what we hear about this budget. Both of those things are weak positions. Politically, she is weak. Her backbenchers were very unhappy about that direction of travel. They were not happy about that interest rate hike that she planned to put up, income tax by 1%. They weren't having that. And the markets, as you say, the markets have been so upset by the destabilising effect of all this speculation. We marched up to the top of the hill. On
can she satisfy both of those two constituencies at the same time, do you think?
Well, I think she'll try to. I think she will say this is a redistributive budget, which also is sound financially. As we say, it will depend whether the headroom is there, sufficient headroom is there, and also whether that smorgasbord can deliver. I think that's hard. And I think, as I say, the one thing that may destabilise all of this is that if ordinary people are finding they're dragged into those higher rates of tax and Labour's opinion polls continue to go south, then that will be still a problem for the party.
Rachel Reeves has talked very often about saying this is a business-friendly government. Does it sound like a business-friendly government to you?
It doesn't, to be honest. I mean, yesterday we heard about the increase in the minimum wage, particularly for young people. That's tough on small businesses who last year were clobbered in the budget, if you remember, by that big NI hike. Now, they have said we don't want anything more to affect our bottom line. Also, growth. What happened to growth? That was meant to be the primary mission of this government. Doesn't seem to me, in anything I've seen briefed out so far, that there's much to drive it. In fact, the opposite. The OBR is going to downgrade growth forecasts for the rest of the Parliament.
So, I mean, Sam, we've talked about a lot of the ways she's going to raise tax. She has also talked a lot about wanting to tackle inflation. It's not only her job, of course. Other people are supposed to tackle inflation as well. But she does have some measures there. I mean, she could mechanically bring down the costs of some things. She's been talking about levies on certain types of on electricity bills, for example. And stamp duty holidays on IPOs. I mean, there are some things that we could look to sort of gifts, I guess. And there's always a rabbit. There's usually a rabbit of some kind. Anything caught your eye?
I think in terms of the rabbit, I mean, if there is going to be a rabbit, it will be a very small rabbit or one you may not even notice coming out of the hat. But I think for markets, if we're looking specifically for markets on the inflation standpoint, again, it's lots of small things. And really, ultimately, there's only very small things she can do to impact inflation. So yes, there may be some things that will help on that front. Likelihood is there'll also be some things that don't and sort of offset a lot of that. So the ultimate outcome is probably fairly neutral. I think I was actually just saying to Rosa before we came on the air that the likelihood is, I think, that with lots of tinkering around the edges, very similar to last year's budget, that effectively you end up with another year-long wait for the next budget and lots of questions constantly about what the headroom is, what gilt markets are doing on a day-to-day basis, gilt markets that are already under quite a febrile atmosphere and moving quite a lot. So I think we're probably in for kind of another 360
Can I take an early lunch today? And
no.
Well, do I need to watch the budget or is it the OBR? When is the market moment where everybody kind of clicks together and we've got a picture of kind of what this actually looks like and how therefore gilts are likely to react, how sterling's going to react?
Yeah, I think the DMO and the OBR coming at the same time, 1:30 after Rachel Reeves finishes. Measuring those things together, so how bad is the OBR versus how much money do they want to borrow, that will provide part of that picture. Then there will just be a lot of digesting of what was going on in there. And actually, just to go back to something Rosa was just mentioning as well, I think possibly the political story will be one of the things that moves the market. What happens, for example, on the two-child benefit cap, very fraught topic, a really key one for how she's going to balance markets versus the party. And so that might end up being the kind of thing that's picked out, but it will be small things, I think.
Is it... If she doesn't do well today, are they done?
Yeah, I think they're in a bit of trouble, and I think it's, when you say, well, let's define what that means, I think that they need to start creating a narrative about what they want to do with this government. You know, why are they in office? And we really still don't know the shape of what this Labour government is. You know, is it a very left-wing government?
Not yet.
Kind of, because they're being forced in that direction, but they don't sort of seem to be. No, they're not standing there saying, right, we're going to tax the rich, and there are measures that do tax the rich, but they don't seem to be creating any kind of real.
Is the absence of a narrative because they would have one, but it's not something that they can do?
No, I think that there wasn't enough thinking before they got into government about what they wanted to achieve once they're here, and that's just left them at the mercy of events. So they constantly seem to be kind of reacting and sidetracking. I mean, talking about the two-child benefit cap, they said that they were going to be cutting welfare. That was a big part of their mission, and that just they haven't been able to do that because of what's happened with their backbenchers politically.
And that has undermined the credibility with the markets as well. We've got a lot going on. Do you take a lunch? Do you not take a lunch today? Do you eat sandwiches? Do you watch the budget and then basically pay attention to what those two briefings are going to look like afterwards? Are you going to form a full picture by the end of it all? We'll wait and see. I know you guys will be paying attention. Sam Unstead, co-editor of our Bloomberg Markets Today blog, and Rosa Prince from Bloomberg Opinion. You're going to hear a lot from them, I suspect, over the next 24 hours. You're also going to hear a lot from Lizzie Burden, who's down in Westminster analysing all of this. She's got sandwiches packed. She's ready to go. Lizzie, over to you.
Well, of course, Guy, our lunch is going to be a buffet today, and I want to continue your conversation and bring in Meg Hillier, who is chair of the Treasury Select Committee and a Labour MP here in the UK. Great to have you with me, Meg. Thank you so much for making time. They've just been discussing in the studio the many, many leaks that have come out over the past few weeks, and I wanted to start by asking you, this is market-moving stuff. Does it worry you? Is that the sort of thing you want to rein in?
Look, I do think that the leaks have been very unfortunate, and that needs to be got a grip of. But let's also be clear, there's been a lot of speculation too, and speculation's fuelled by media, by businesses, lobbying. And it's very challenging for a Chancellor to reject every bit of speculation, because effectively she'd be writing her budget in public. But I agree that the leaks that have come, some of them clearly from the Treasury, need to be dealt with.
OK, well, a lot of those leaks have been about tax rises. Does it matter that the Chancellor told us after her last budget she wouldn't be coming back with more tax rises, and yet that's exactly what it seems we'll be getting today?
Well, look, I think I'm on doorsteps in my constituency all the time. People know that the NHS is on its knees, and there's a real drive to drive down waiting lists. They know what's going on in their children's schools, so they do understand that there's a challenge, while also worrying about the cost of living that they are facing. And so actually, if they know that that money is being spent well, they need to see. And look, let's be clear, the world is in a very difficult place. The Chancellor inherited one of the worst hands that any Chancellor's inherited since the Second World War, so there are going to be very tough decisions that need to be made.
But if she freezes personal tax thresholds, would that amount to a manifesto breach, breaking the promise to those voters?
No, she said she wouldn't raise income tax, VAT or national insurance, and I think people are not, they understand what would happen if thresholds are frozen.
A stealth tax rise?
Well, it's not a stealth tax because everyone's talking about it, so it's hardly as... I don't think anyone in the country doesn't understand what that would mean for them, but we do need to make sure that those of us with the broadest shoulders are helping to support others. And I've got 1 in 2 children in my constituency living in poverty, and we need to be investing in them, we need to be helping people into work, we need to be helping people support themselves, and so we need to make sure that that investment is there.
So officials have rolled the pitch for a smorgasbord of tax rises, some of which you've been lobbying for on the Treasury Select Committee. Is that a credible approach? Some have warned that it could turn out like the omnishambles budget of 2012.
Well, there's always a challenge, but I mean, the manifesto pledge was clear. I don't think anyone wants to break a manifesto pledge, and clearly, well, what we're hearing is that's not going to happen. We don't know the finally from the budget at this point, but there's always a challenge when you're looking at lots of different taxes. But we looked at gambling, and we felt that as a committee cross-party, that certain forms of online gaming, which cause a lot more harm, are not taxed as highly as other things like horse racing and going into a casino where it's less harmful. So we thought there should be an opportunity to raise taxes there. We've also looked at cash ISAs, and we've looked at child poverty. We've looked at a number of the issues that were being discussed around the budget.
So what would success look like today? Is £15 billion headroom against her fiscal rules enough? Is that the bar for success?
Well, I wouldn't want to put a precise figure on it. She will be looking at all of the numbers and the projections, and she'll have had access to that, which I have not. But clearly the 10 10 billion was always quite tight, and was about, you had to be quite optimistic to think that was really going to be enough in the long term. It's usually been between 20 and 30 billion at the lower end in normal times. We're not really in normal times now, so she will obviously be looking at that. But then I think there's a lot of discussion about what's happening with child poverty. We need to invest in the young people we've got, with the birth rate very low in the country, so I think that's important. And we've raised these issues about gambling tax and also about the cash ISA, because we were worried about the amount that could be saved in that being reduced, and we're hearing mixed messages on that, so I'll be interested to see what she's got to say this afternoon.
You mentioned about poverty, and of course we're hearing that there'll be a big effort to ease the cost of living, but do you worry that some of those measures will actually raise inflation and perhaps harm employment?
Well, I'm not sure. I mean, if you help people ease their costs, for instance, energy bills has been mooted. I mean, we're talking about speculation, we don't know if it's true, but if people have got any spare money, then they will be spending that locally. And what's interesting about the poorest families, that they really spend in their very tight local community. They're not buying online so much, and so that actually can boost money going into the economy, albeit small scale, but actually every little bit helps.
But concerns have been raised that with the minimum wage going up, people could lose their jobs.
Well, I think that if you look at the minimum wage, though, it's been an extraordinary situation in this country. We thank goodness we have a minimum wage, because even on the minimum wage, it's very hard to make ends meet, and we do need to be looking at that balance about people being paid enough so they can actually make ends meet, and that work really does pay. So having the minimum wage at the right level, I think, is very important.
Meg, just on the spending cut side, if the revenue raising is delayed to the end of the decade, is that credible?
Well, I think there are reasonable questions to ask about that, but look, I think there's got to be some discussion about also what will happen in between. So last year, the Chancellor announced investment in infrastructure, for example. That takes a while to trickle through into the real world. We're a year in now, and we'll be seeing, I'm talking to constituency MPs, we're seeing things happening in their constituency. So I think there is an issue about how far away you push that, but there are other things that will happen in the shorter term.
Meg, just finally, we started by talking about the flip-flopping between appeasing the bond vigilantes, appeasing the left wing of the party. Who's the Chancellor more in hock to use the Mayor of Manchester's words?
No, I think that the Chancellor is very focused on making sure that she keeps the country's finances stable. I think that's really at the core of her. She has a job. She's not, I think she would agree, the job of being Chancellor is not about being popular, it's about doing the right thing. I think that's what she's trying to do, so we'll see what she's got to unveil later.
We will indeed. Meg Hillier, thank you so much. That's Meg Hillier, Chair of the Treasury Select Committee, who I'm sure will be passing through all of the many pages of the budget and the OBR forecasts as well. But back to you in the studio, Guy, Anna and Kriti.
Lizzie, thank you very much. Lizzie Burden, of course, in the cold for us. Thank you, Lizzie. In Westminster, the UK Chancellor Rachel Reeves is expected to deliver her budget at 12:30 p.m. in London. Viewers in the UK and Europe can join us for full coverage and analysis as it happens. And it doesn't stop there, of course. The opening trade will break down the numbers with key business and political voices in our budget special. That is tomorrow morning. So don't miss that, where we will all be in the cold. But we're looking forward to it. It'll be good to get another chance to digest the news flow. Meanwhile, European stocks going higher with other things in mind. A gift from the Fed in December, perhaps, is what's in the market's mind. Modest gains.
It's really hard to tell because Powell, nothing from Powell. I think the blackout period starts Friday.
Yeah.
And I don't know. Can I read Williams as a proxy? Is that the right way of looking at it? Is Mary Daly the proxy for Powell? Is that what the message has been over the last few days? The Journal obviously publishing its piece. All of that kind of taking the market towards the idea that actually a rate cut is going to be delivered. And we're at a pricing level now that will be consistent with the idea that the Fed kind of has got the green light.
Well, something we haven't talked about yet is we have initial jobless claims at 1:30 p.m. today, UK time. And then we have the beige book at 7 p.m. UK time. So if all the reporting around some of the kind of divisions are real, we're going to see how deep those divisions are and what they're actually trying to target. Is it still the labor market, or is it the kind of echoes of, okay, well, inflation hasn't come yet, it's coming come 2026?
And the day before Thanksgiving, futures in the United States still going higher. So it looks as if we have a bit more of this narrative to run. E-minis up by 0.3%, NASDAQ futures 0.4% higher. That is it for the opening trade. I'll be back with the budget show a little bit later. The Pulse, though, is up next here in London. This is Bloomberg.